What if the stock market crash you're seeing right now isn't the start of a disaster, but the beginning of one of the biggest wealth opportunities in years?
All right, let's just get right into it. You can feel it, right? There's this anxiety in the air. Oil prices are going nuts. The stock market's taken a dive. I mean, it's down over 14%. And a lot of us are just kind of looking at our screens going, what on earth is happening? So today, we're going to break down that connection, between these crazy oil shocks and recessions. And more importantly, we're going to look at how a seasoned investor actually thinks about navigating this whole mess.
And this quote, this is from Larry Fink, the CEO of BlackRock. We're talking the biggest asset manager on the planet. And what he's saying here is just, wow, it's incredibly powerful. He's basically laying out two completely different futures for the economy. On one hand, you've got oil hitting $150 a barrel, which could trigger a really deep recession. On the other hand, maybe things calm down, oil drops, and we see some strong growth. So the big question is, which path are we on? Let's dig into how this actually works. So let's say we are heading towards that scary $150 oil number. Why does that pretty much guarantee a recession? Well, it all comes down to this predictable chain reaction. It's like a set of economic dominoes just waiting to get knocked over. Okay, so let's walk through this domino effect step by step. First up, high oil prices. That doesn't just mean you're paying more at the pump, right? It makes everything more expensive to make and ship. We're talking groceries, clothes, gadgets, you name it. And that, my friends, is inflation. So what do governments and central banks do to fight that? They start raising interest rates. Okay, domino number two. Now, higher rates make it more expensive for companies to borrow money for, building a new factory or hiring people. So what happens? They pull back. They cut spending. They slow down hiring. Domino three. And that, of course, leads to job losses, or at least fewer jobs being created, and people start spending less money. Domino four. And once the flow of money in the economy slows way down, GDP falls, and boom, that's it. That's your textbook recession. See how it all connects? And this chain reaction can lead to the absolute worst case scenario. It's a word you might have heard thrown around, stagflation. And man, it's a top.
Watch the full video on my channel. This is just the beginning.